Capital budgeting. Capital budgeting is a process of identifying and evaluation of long-term projects. It is basically the investing decision. As we know that in the corporate finance or financial management, there are three main functions. One is called investing decision, other one is called financing decision, and third one is called operating or asset management decision. So capital budgeting falls under the category of investment decisions. So it is basically an investment decision-making process used by an organization to evaluate and select the long-term projects. So it is a very crucial decision making process, because as we know that one good decision may lead a company towards a good success story, and one wrong decision may lead a company towards bankruptcy. So it is a very important decision and requires a very detailed, thorough, due diligent process of evaluation. Okay, so then capital budgeting process. In this process, what we do, we first of all generate the ideas, and after identifying the ideas, we then identify the proposals. The ideas may be generated from either top or bottom of the organizations. These may be generated from any department or functional areas, or these may be identified based upon the outside of the company. We can identify any other idea from the market as well. We can identify that these are the leading emerging technologies or the new trends which are being emerged in the industry. These ideas need to be tapped and we should opt for that. And these are so important that if we avoid it, then maybe we get obsolete from the industry and we become non-competitive, and our competitors, they may adopt that technology and they will lead in the market. So these ideas can be so crucial as well. So then after identifying the ideas, we go for analyzing individual proposals. In the individual proposals, we identify all their profitability, we generate their cash flows, and based upon, we identify the cash flows, their timings of cash flows, and then we see that either these are profitable or not. So we identify all the cash flow generating processes, and then calculating their profitabilities and applying several techniques, which we'll discuss later on. Then we talk about planning the capital budget. In planning the capital budget, here we see the all profitable proposals. We can see that either these profitable proposals, by taking into account that how firms' financial and real resource constraints can be there, and how we can identify how many profitable proposals we can opt for that. We can see here projects timings of cash flows, and we can decide that which project fits in the overall firm's strategies and which proposal does not fit in the firm's strategy. Okay, so after that, then finally, what we do, we monitor and post audit, because it is a very important aspect, that monitoring and post auditing. If we don't monitor or post audit, then obviously we will not be able to identify our mistakes. And if we don't identify our mistakes, we won't be able to learn anything. So these monitoring and post auditing are crucial in this dynamic world. In that sense, for example, right now in the market is very dynamic. Things are very changing with very rapidly, with very fast pace. So what we identify in all the capital budgeting process, we have to make a lot of estimations and assumptions in generating cash flows. For example, we can say that, okay, this much amount of revenue we will generate in the future. Let's say we see that $1,000, let's say, we will generate in the future, that this is the revenue we'll generate in the future. But problem is that these are our expectations, these are our assumptions. And when we are going to do the actual projects, so it may happen that our revenue, we will not be able to collect our revenue, or the cost estimation, we think that our cost can be, let's say, $600. But as we know that it is the inflationary periods, and particularly post-COVID, there was an inflationary period all over the world, and we can see that our costs of productions, these increased significantly. So that's why our monitoring and post auditing is very crucial in that sense. Then we have to talk about the project categories, that how many categories of the projects can happen. Like for example, first one is the replacement projects. This one is the most common category which may occur almost in every organization. For example, first and its very most common example is that we need to replace our existing plant machinery equipment with a new one. So old plant machinery equipments, let's say its economic life, what we say its economic life and expires, economic life expires, and that plant and machinery, that vehicle, that car, or anything that gets infeasible for us, because when we say that this marginal cost has significantly increased from marginal benefits or marginal revenue from that plant and machinery, then we need to replace it with the new one to get so that we can get the optimum utilization. Our marginal revenue can be increased. So this is the replacement project in which we need to replace it with the old equipment. With the old equipment, we need to replace it with a new one. So this is the most common type that happens almost in every organization. And then after that, we talk about there might be some need of replacement. Let's say when there are some new technology that comes in the market, that new technology obviously brings some efficiency, more efficient production at low costs. And obviously, when we, for example, when we know that in the, let's say in the, if we talk about particularly in the technological gadgets, for example, cell phones, cameras, like printers, photocopier machines, scanners, for example, we know that the previous photocopier machines or previous scanners, they are less efficient. These machines are, let's say, printing, let's say 10 copies in per minute or 20 copies per minute. When new technology comes in the market, and that new technology brings us with some more efficient, for example, 50 copies, 100 copies per minute. So we need to adopt that new technology so that we can get the maximum level of production at an optimum rate. Optimum level of production can be achieved at a lower cost and better production. So this project requires some bit more analysis in comparison to the old equipment based projects. So because here new technology is involved, we need to see that how we can adopt the new technology. Either we'll be able to get optimum benefits from it or not, because as we can see that in many of the organizations, there are new technology coming to the markets, but there might be some resistance in the organizations in which people do not want to adopt it. So we get challenges in that. So we need to see a bit more detailed analysis is required in this out of date equipment based replacement project in comparison to the old equipment project. Then there is another category which is called product development. In the product development, what we do, we launch the new products in the market. We want to expand our product line so that we'll able to grab more and more market. We can increase our revenues. It is about launching the new products, in the market. So when we launch the new products in the market, we want to grab more market share. We want to expand our product line. So this is the core objective of the product management. This is the common examples happening almost in most of the organizations. People want to expand their operation. They want to expand their product line. And then in the market development, what we do, we also want to explore the new market as well with the same products. Let's say we want to let's explore the new market, which we have not tapped yet, in order to get more and more customers, more and more clients from these markets in order to increase our revenue. So this example is of market development. And then we can talk about the diversification. And the diversification, it is basically tapping the new market, tapping the new market with the new products, with new products. It's totally a diversified type of a nature of a project in which we are entering into the new market with the newer projects, with the newer products. So offering the new features in the new markets to grab more and more customers, more and more clientele to expand our operations to different regions. So this example can be of that category. And then there can be another category, what we call as regulatory or safety or environmental projects. As their name reflects, names reflect that these are the projects which are mandated by by the regulatory authorities. For example, we are a company is dumping the wastages wastages in the rivers or in some other areas, some other land, which that wastages may be damaging the nature, may be damaging the lives of different other creations like birds, or like for example, as we know that it's quite evident that people living in the surrounding of certain factories, production units, there are particular allergies because some dangerous gases may be excreting from these factories, so which are damaging the people, humans, their skins, their people are getting allergies, even they are getting more and more diseases. So the environmentalists, their agencies or regulatory agencies, they may compel the companies that we want that you cannot dump these wastages with as it is, because these are dangerous, these may be affecting the life nature. So for this you need to first convert it into the environment friendly mode. So in that case recycling projects can be there. So these recycling uh, projects can be under the category of this regulatory safety or environmental projects. So these are the obviously mandated by the regulatory authorities. So these do not require much detailed, ample detailed level of analysis, because we have to do it. There is no other option of not doing it.